Welcome to Insights. I'm Eric. Thanks for stopping by again today. We're going to talk about the 10-year bond market or the Treasury bond market. I think the setup there is quite significant. We're seeing movements and we're seeing a change of trends and a persistence inside the bond market. And the bottom line is what is it trying to suggest? We're looking at up, and just down on the monthly. And the question is how much before even the monthly trend flips? And we can see that here. If we isolate the 10-year by itself and we look at the price and the volume oscillators, we're at -19 and -4. Volume tends to lead price beforehand, so you're not that many ticks below the zero line. Volume should tick up pretty soon, and this should probably be followed by a price uptick or a primary trend breakout that will likely start sometime next month or even in September. So why is the bond market looking so strong in the face of what everyone feels is out of control inflation? That's a good question. So perhaps the invisible hand has lost it, or the narrative that's going out there that the majority is embracing about inflation is not correct. Whatever the concerns might be, I think the headlines will come to verify them. The escalation of the COVID strains that are out there and the shutdown of the economy, second shutdown, more forced restrictions. I wouldn't play that too much past the reality of what the market is trying to suggest. I don't even know if that's what the market is trying to suggest, but I can tell you the bond market is either being forced up by official intervention, and they can't do that for long, or there is an economic slowdown that's coming, and it's not too far. And that will come pretty close in a month or two. It's difficult to say. The strong period, we're in July, we're heading to August. August, September is a strong time frame for the bond market. So it is something that I would keep an eye on, and I would not discount the messages that are taking place down below inside the matrix. We are seeing not too long ago, a month ago, you said everything was risk on, which meant supportive of a higher stock market, a strong economy. But that move is starting to change a bit here as we see more signs of risk off and risk off warnings taking place both in the economy and intermarket flows. This will pick up. We'll see a higher count of risk off showing that we're already seeing, as well as other markets that will start to perform poorly. Now you put that within the backdrop of an equity market that has upside extension that's rivaling some of the stock market's greatest concentrations since the early 1800s, and you start to worry if the ball gets rolling here, who's going to be able to control it? And I think the illusion that someone can control the ball is just that. It is an illusion. If you read any of the historical textbooks, you can see how when expectations get crushed, people get smoked and they get caught on the wrong side of the train, and all panic comes about. So if we look at the price sticks, we can see that we have a relentless rally in the bond market. And talk it down if you like. It's just what it is. We are starting to rally here. If we take out this high here, here's the 10-year, here's the 30-year plus ETFs. If you take out this high, it's going to get even more concentrated, and I think that would happen if we're going to flip the primary trend. We can see at the TLT reversals that we're starting to climb above even some of the heavy band that was here as resistance. As it works its way through, we're going to hit an air pocket between this band grouping here and this one up here, and price will take off rather quickly. We haven't done it yet, but if it does do that, price is going to accelerate even faster. When we look at energy, and we've been talking about this for weeks, months, actually it is months, we've had this monster energy build, and this is the composite DI and DI2 down here. Monster energy build, long duration event, and I've highlighted some of these curls where the price has a bullish energy build and then releases downward. Here's a reflection of where that might take us, and it might be a multiple step downward, more than just one step. It could be a two-step process, but what we're looking for is an unwind. And when you get these unwinds, price tends to rally from here. These all set up this rally general. This unwind set up this rally from here. This unwind set up this rally from here. So this is an unwind. that's supporting a backdrop for a bond market rally. Perhaps the stock market can rally with this, and perhaps not. If it's perhaps not at the record valuations that we're seeing down here, and this is fundamental and price cycles all combined, it could be a hectic unwind if it takes place. And so these are all things that I think everybody who's following the matrix should be watching. This is, again, we are getting into a very difficult time, and I'm starting to see, and everyone who's reading this is starting to see changes within the matrix that are becoming too difficult to dismiss. So if you can pass this information along, I would do so. I would encourage more people to get on board and start following the matrix, because this unwind will not be pleasant if it gathers some steam. And I think the perception that the Fed can control this is an illusion. And if experienced investors know what that means, the inexperienced ones tend to get rolled over on. And this is a dangerous setup. This energy build still has to unwind. It's not a quiet market. As you can see, WA is picking up as we start to rally here. That supports continuation. If it starts to quiet down, then it suggests a pause is coming. But we have a long way to go from here down into this region, or even down into here. It will take at least 3 or 4 months to get down here, and then maybe even there's a second rally up, and then it'll take another 6 months to 9 months to get down here even further. It doesn't do it all at once, but the fact is that the idea that the bond market is cooked, and then we're going to see nothing but higher yields. I mean, that's coming eventually, but it's not a straight line move. It is possible we could go from minuscule yields that we have of 1.2% on the 10-year roughly down to zero, negative interest rates. These are all possibilities as the world tries to contend with the unwinding of the American empire. They're all related to one another, and I'm not too sure that the virus situation can't be pulled out of that and talked about separately either. They are intertwined, and whether or not there's a conscious decisions made behind the scene that intertwine these things, I don't know. I don't have access to that. I can only read the trends. I can only see what's taking place, and the risk is growing, that we're moving from risk on to risk off. And if you're willing to protect the economy, to save the situation, you wouldn't be threatening lockdowns. You'd be doing everything you can to protect a vulnerable system. If that attempt is not being made, then you have to wonder if then this is more of a coordinated action. But then again, I'm not going to step into that fray, because I don't want to be labeled as anything from one side or the other. Whatever it comes to, I find that government in general is not doing the right things at the right time at any point in the history. So I'm not generally waving the flag either way from one side or the other, or from anywhere. The world is going to have to adapt of the changing guard of the American empire to a new core economy, and yet no one talks about that even as we move through the trading day now. We're probably within 10 or 15 years of that event, and nobody talks about it. So I don't think anyone's going to talk about it until it's right at the bottom of the feet, and most people realize that there's going to be huge ramifications of that transfer. So this is where we stand with the bond market. Excuse me. I don't want to make it an issue of, other than I want you guys to keep an eye on this stuff. The bond market rally could gain strength as we go to triple alignment here, and we are getting awfully close. We're only a couple ticks away. Keep an eye on the lead M tab and watch these arrows here. This will go from down to up, and this will go from down to up, and volume tends to lead. And when this flips, the whole game changes. And I can tell you, the invisible hand is rarely wrong. The invisible hand was worried that something was taking place. That's why this energy build was here. Now, when I was talking about it this whole time, nobody was listening. I used words like it wouldn't matter until it matters. Well, pretty soon it's going to matter. And then it's not going to do much good for me to say, hey, this is what you guys should have been doing. I think I continue to talk about what we see every day. You guys see the same stuff as I do. If you have any questions about how to interpret that, let me know. This is not going to be easy stuff, and it does get a little bit nerve-wracking in terms of what the unwind is going to look like. It's setting up for 2022 is going to be a challenging year to say the least. So contact me if you have any questions, and thanks for watching the video, and we'll talk to you guys real soon.